Hello and very warm welcome to Victory IS platform. As you are aware that we are discussing 2 years current affair rapid revision program important for prelims 2026. So let's start with the current affair updates on economy. Advanced and EPCG authorization scheme. EPCG means export promotion for capital goods. So what kind of scheme government has come up with if the exporters are not able to fulfill their export obligation? The finance ministry has introduced amnesty scheme aimed at offering relief to traders who have defaulted on their export obligations, right? This scheme provides an opportunity for traders to rectify past defaults and fulfill their export obligation by paying customs duty and interest. So this is the kind of relief that will be given. Providing relief for defaulted obligation. The primary purpose of the amnesty scheme introduced by the finance ministry is to alleviate the burden faced by traders who have defaulted in meeting their export obligation. This initiative aims to support and provide a way forward for traders who have encountered challenges in fulfilling their export commitments. Covered authorization scheme, right? What kind of authorization scheme? So the amnesty scheme encompasses two important authorization scheme. Number one is the advanced and EPCG, that is export promotion for capital goods authorization scheme. Traders who have defaulted under this scheme can avail themselves of the benefit offered by the amnesty scheme. What is the benefit that is there? So if they are paying for this import duty, custom duty, etc., then that can be an interest also, then that can be taken as that export obligation also. To benefit from the amnesty scheme, traders are required to pay the outstanding custom duty and interest accrued on their defaulted export obligation. The scheme allows them to settle their dues by paying custom duty and interest with a maximum limit set at 100% of the dues. That is the maximum limit. In less than that also it can be allowed. Monitoring and efficient handling. The Central Board of Indirect Taxes and Customs, that is CBIC, is responsible for monitoring and tracking the cases falling under the amnesty scheme, right? Principal commissioners and commissioners play a very crucial role in ensuring that exporters approaching for duty payment are duly registered with the DGFT, right? A Directorate General of Foreign Trade or not. This streamlined monitoring process aims to expedite the closure of old cases related to bona fide defaulters. Now, what is the timeline? So, timeline to avail the benefit of amnesty scheme, the authorization holders must complete the payment of custom duty by September 30, 2023. This provide a specified time frame for the traders to rectify their defaults and fulfill their export obligation. If we talk about significance for traders, what significance is there for traders? Then the amnesty scheme holds a significant importance for traders who have faced challenges in meeting their export obligation. It offers them an opportunity to rectify past defaults and fulfill their obligation by paying customs duty and interest within the specified time frame. This enables traders to regain compliance and move forward with their export activities, fostering growth and stability in the trade sector, right? This is about this amnesty scheme. Right now, there is one update related to rupees 75 commemorative coin for 75 years of independence. So, in a notification released on May 25, the Finance Ministry announced the launch of new commemorative coin. This coin holds a significant historic and cultural value, celebrating important events and personalities in the country's heritage. So, the composition of rupees 75 commemorative coin is the newly introduced 75 rupee coin is composed of unique quaternary alloy. That is, it consists of 50% silver, 40% copper and 5% nickel, 5% zinc. This blend of material ensures durability and longevity, making the coin a cherished piece of collectors and enthusiasts alike, right? Now, the design and inscription, if we talk about, the face of the coin is adorned with the renowned lion capital of Ashoka pillar, like you might have seen Ashokan pillar in it is in emblem also, Satyamev Jayate, where it is written pillars at its center. Below the emblem, the inscription Satyamev Jayate is elegantly engraved. On the left periphery, the word Bharat is inscribed in Devanagari script, while the word India appears on the right periphery in English. Flipping the coin reveals a captivating image of the new parliament building, showcasing the India's nation's democratic spirit. The upper periphery carries the inscription Sansad Sankul, right, in Devanagari script, while the lower periphery proudly display the word Parliament Complex in English, right. Acquiring commemorative coins for those interested in obtaining commemorative coins. The Securities of Printing and Minting Corporation of India Limited (SPMCIL) website serves as a reliable platform. However, it's important to note that the value of commemorative coin may not always align with their face value, because it is using a lot of silver as well, as we have seen here, silver, copper, etc. So value may not be 75 rupees, right? It may exceed also. These coin offer contain precious metals such as silver, gold, making them collectibles with intrinsic worth beyond their monetary denomination. This we need to keep in mind if we are trying to get this particular coin, right? It will not be available in 75 rupee. Role of central government and RBI. Under the authority granted by the Coinage Act 2011, the central government holds the power to design and mint coins across various denomination, and the Reserve Bank of India play a crucial role in the distribution of these coins, ensuring they reach the public as intended by the central government. So it is not under RBI, whereas if we talk about currency, paper currency, that is under RBI, right? Mints across India. All coins, including commemorative ones, are minted in the four mints owned by the Government of India. These mints are located in Mumbai, Hyderabad, Kolkata, and Noida. They are responsible for the precision and craftsmanship behind the production of nation's coin, preserving the integrity of the currency, right? But when we talk about paper notes, right, 200, 500, 100 rupee note, 20 rupee, 50 rupee, all these notes are printed under RBI, under RBI. Expected loss based approach for bad loan provision. This we have already covered, right? This we have already covered bad loan provisioning at some point of time. So we will not, we can skip this, right? Now, evergreening of loans. I hope we understand the meaning of evergreening of loans. This came into the news when Raghuram Rajan was the governor of the RBI, and strict implementation was there with respect to this asset quality review of the banks. And then we came to know many things about this evergreening of loans. Means the loan has been given to one particular firm, and they are not receiving principal as well as the interest. So what banks are doing, banks are again issuing loan to pay the previous loan. That is known as evergreening of loan. The Reserve Bank of India governor raised a red flag over banks adopting innovative methods for evergreening of loans, covering up the real status of stressed loan for of corporates, right? Stressed loan, also we can say NPA, right? NPA is non-performing asset. Evergreening of loan refers to a practice where banks or lenders provide additional funds or take other measures artificially sustain loan that is not being repaid as scheduled. So if you are not able to repay, then banks are issuing another loan, right? Maybe different channels are being utilized for this. So it is a temporary solution used by banks to avoid classifying loan as non-performing asset. This is what happened, and it was got revealed in asset quality review when it was implemented in 2011, 12, 13, 14, because such classification would require them to set aside more money, right? Like we discussed, the provisioning of money is needed, right, for potential losses which could affect their profitability. If we talk about methods that are used by banks for evergreening, then bringing two lenders together to evergreen each other's loans, right? So two lenders together, that is, they are there, and they are evergreening each other's loan. Two banks can be involved. Good borrowers are being persuaded to enter into structured deals with stressed borrowers, right? Good borrowers are there, and they are being persuaded to get into structured deals. Structured loans means, again, we have talked about restructuring of loans. Maybe the EMI will be reduced, the interest rate may also be reduced, etc. So those kind of things. Domestic systematically important banks that we have already talked about, right? Too big to fail banks. So the RBI has named top 3 lenders in India: State Bank of India, ICICI Bank, and HDFC Bank as DSIBs. What is DSIBs? Domestic systematically important banks, also known as too big to fail. Also known as too big to fail. We have already discussed this at one point of time, so we will not go into the details of it as of now, right? How these are regulated, etc. This we have already seen. Okay, we can see how these banks are regulated. So in addition to the usual capital conservation buffer, DSIBs in India required to maintain additional common equity tier 1 CET1 capital. According to RBI's latest press release, SBI must maintain an additional 0.6% CET1 as percentage of its risk weighted asset. We have already seen this tier 1 capital, tier 2 capital, when banks have to maintain CAR, capital adequacy ratio, or also known as um, capital adequacy ratio, or also known as capital to weighted risk asset ratio, capital to weighted asset risk ratio, CRAR or CARAR, like this. This is what we have to keep in mind, right? While ICICI Bank and HDFC Bank must maintain additional 0.2% each. Foreign banks with a branch presence in India that is designated as global systematically important bank, that is GSIBs. DSIBs is for domestic banks. Foreign banks, GSIBs, must also maintain additional CET1 capital surcharge in India as required by the rules for GSIB. Why were only 3 banks designated as DSIBs? RBI announced these two banks first, SBI and ICICI, in 2015 and 2016 respectively. Based on data from banks as of March 31st, 2017, HDFC Banks was also classified as DSIB along with SBI and ICICI Bank. The current update is based on data from banks on March 31st, 2022. In 2015, global rating agency Moody's, right? There are different global rating agencies. One is Moody's. Questioned the RBI's decision to initially designate only 2 banks as DSIBs, stating that the central bank's approach was less stringent than in other jurisdiction. There was and was therefore credit negative. The RBI's designation of SBI, ICICI and HDFC Bank as DSIB highlights the importance of these banks to the financial system in India. As a result, they are subject to additional regulatory requirement and closer supervision to ensure their stability and protect against potential loss. That is why we have seen that they are also referred as too big to fail. Now, Utkarsh 2.0, RBI's medium-term strategy framework Utkarsh 2.0 was launched recently. Utkarsh 1.0 was for the period 2019 to 2022. Now, Utkarsh 2022 is a medium-term strategy, or Utkarsh 2.0, in line with the global central bank's plan to strengthen the regulatory and supervisory mechanism. On international level, we have seen there are Basel guidelines, Basel norms, etc. Right? Why has loans recovery via Lok Adalat jumped fourfold? Now let's understand loan recovery. We have already seen in the previous classes how these NPAs etc. are there, how asset reconstruction companies are being used. In 21-22, the number of non-performing asset referred by banks to various recovery channels, including Lok Adalat and the Insolvency and Bankruptcy Code, increased fourfold over 2020 and 2021. Among all channels, the number of stressed accounts reported to Lok Adalat by banks increased dramatically in 21-22. Why this increase is there? So first, understand banks loan recovery mechanism. Lok Adalat conducted by NALSA, the award of Lok Adalat are final and binding on all parties, right? So it is final. Insolvency and Bankruptcy Code, if we talk about, it was introduced in 2016 and amended in 2021. IBC provides a time-bound process for resolving the insolvency and corporate debtors in 330 days. Two methods are there. One is resolution. If resolution is not worked out, then it will go for liquidation. Debt Recovery Tribunal, that is DRTs, along with Debt Recovery Appellate Tribunals established under Recovery of Debt and Bankruptcy Act 1993, the expeditious adjudication and recovery of debts, right? Now, securitization and reconstruction of financial asset and enforcement of the Security Interest Act, that is also known as SARFAESI Act. Under this, banks can take control of securities pledged against the loan and manage or sell them to recovery dues without any court intervention. So SARFAESI Act also allow bank to go for selling this collateral etc. whatever has been pledged while taking loans. Why cases referred to Lok Adalats increased dramatically? Because banks send stressed accounts worth rupees 20 lakh up to 20 lakh to Lok Adalat. So if the asset is up to 20 lakh, then it will be sent to Lok Adalat, which are organized by bank in collaboration with the District Legal Services Authority. The number of cases referred to Lok Adalats is high since the cost of recovery through this route is lower than DRTs or SARFAESI Act. Debt Recovery Tribunal and SARFAESI Act is the cost is more for debt recovery. However, the rate of recovery through this route has been very low, 2.3% in 21-22 and 4% in 2021, as it is very difficult to recover loans from defaulters in the small ticket loan segment, right? This is about why it has increased, right? Why the number has increased. NARCL acquires first stressed account from IDBI bank led lenders. The National Asset Reconstruction Company, NARCL, I have already explained, that is why I am not going into the details of it, how these asset reconstruction companies work. They purchase bad loan, right? For example, if you want to understand this, see, this is depositors. Depositors are depositing their money into bank, and bank is lending this money as loan, right, to the borrowers. Now if this loan is not coming back, then it is turning NPA after certain duration, that is 90 days, right? Now for suppose this is 1 lakh rupees, or suppose this is 1 crore, right, 1 crore, and 1 crore rupees has not come back. Suppose on 1 crore with respect to 10%, this 10 lakh interest also bank would have received, right? But bank is not neither receiving 1 crore nor receiving this 10 lakh, and this loan is turning into bad loan. Bank is having this loan as a non-performing asset. What banks can do, asset reconstruction companies will be there. This asset reconstruction company will be purchasing this loan worth 1 crore, and it will give upfront payment to the bank, for example 40 lakhs, right? 40 lakhs rupees it will give, and they have purchased loan worth 1 crore, loan worth 1 crore, and they will purchase it in 40 lakhs. So they will give 40 lakh to the banks, right? So bank can bank can clean their balance sheet with this 40 lakhs and the amount that bank may be provisioning on their own. Now this asset reconstruction company will do what? They will try to recover this loan, and suppose in this entire process they are able to recover 70 lakh rupees, then 40 lakh rupees they have already made payment to the bank, and now 30 lakh rupees may be their profit, right? The profit of asset reconstruction company. So this is asset reconstruction company. So National Asset Reconstruction Company acquires first stressed account from IDBI bank led lenders. This is JP Infratech. JP Infratech from lender led by IDBI bank, right? IDBI bank. NARCL will acquire asset of 1585 ratio for cash and security receipts, that is SRs. Security receipts which are issued in favor of the transferring lenders are secured by a government guarantee for their face value, right? NARCL, as you can understand, Bad Bank Asset Reconstruction Company, is a specialized financial institution that buys non-performing asset. I have already explained how they buy non-performing asset from banks and financial institutions so that they can clean up their balance sheet. This helps banks to concentrate on normal banking activities. The asset reconstruction companies or ARCs are registered under RBI, right, under Reserve Bank of India. It was announced in the budget of 21-22. Bad bank loan, etc. Bad bank was also Bank Board Bureau, bad bank, etc. They were also proposed. The plan is to create a bad bank to house bad loans of approximately 500 crores and above. Expected loss based approach for loans, loss of provision by the bank. This is also what we have seen at some point of time, so we will not go into the details again. Credit defaults swap, this is also we have seen, right? Credit default swap. Cabinet formed the 3 multi-state cooperative societies at the national level. Now this is what we can study. The Union Cabinet approved the setting up of 3 new cooperative bodies: National Multi-State Cooperative Export Society, National Multi-State Cooperative Organic Society, and National Multi-State Cooperative and Seed Society, right? So under the Multi-State Cooperative Societies Act 2002, when one particular cooperative society is present in more than one state, that is multi-state. It will help in achieving the goal of Sahkar se Samriddhi through the inclusive growth model of cooperatives. Now, primary to national level cooperative societies, also known as primary agricultural societies, are also there. Primary agricultural societies, right? Credit societies, PSCs, right? Credit societies are also there, including primary societies, district, state, national level federation, and multi-state level can become its member. The state cooperatives in India, if we talk about, there are about 8.5 lakh cooperatives which have around 29 crore members, mainly from rural areas, who will benefit from this particular move. right? Now, if we talk about Small Industrial Development Bank of India, that is SIDBI, to support micro lending. SIDBI is very famous, right? All India Financial Institution, Small Industries Development Bank of India, that is provides financial support to microfinance companies, which then micro lends to other group institution individuals, right? So SIDBI is providing fund to microfinance companies, right? Microfinance institution, and this will be giving microfinance requirements to retailers, right? This is what the model is. SIDBI provides funds for the fund. So they are providing fund to lend the fund, so fund for the fund. It provides direct financing and indirect financing, also focuses on credit plus approach for facilitating technology modernization and upgradation, etc. Nodal ministry is Ministry of Finance. It is one of the 4 financial institutions regulated and supervised by the RBI. Now this is about SIDBI. Now we are talking about NPAs. Bank wrote off NPAs in excess of rupees 10 lakh crore in last 5 years. Wrote off means now this amount the banks will not receive. This statement has come from Finance Minister. Banks have written off the bad loans worth 10 crores, 10 lakh crores approximately in the last 5 fiscal years, as told by the Finance Minister in the Parliament. What are NPAs? We have already seen, right? A non-performing asset is a loan advance for which the principal or interest payment remained overdue for a period of 90 days. How are they described? Banks are required to classify NPAs into substandard, doubtful assets and loss assets, right? Substandard asset, if we say, which have remained NPA for a period of less than or equal to 12 months. We have already seen beyond this. We have talked about special mention asset 0, special mention asset 0, special mention asset 1, etc. These kind of things are also there. Doubtful asset, classified doubtful asset if it has remained in the substandard category for a period of 12 months. And loss assets, as per RBI, loss asset is considered uncollectible and of such little value that in its continuance as a bankable asset is not warranted, although there may be some salvage or a recovery value. They may have some recovery value, but it is very difficult now. Writing off of bad loan means what? Writing off a loan essentially means now it will no longer be counted as an asset, right? So bank have to provision entire amount by their own, maybe from their profits, maybe from their assets. By writing off loan, a bank can reduce the level of non-performing assets on its book, but bank have to provision for it. An additional benefit is that amount so written off reduces the bank's tax liability also. Why do banks write off? What is the reason? To clean their balance sheet. After the write off, the lender moves the defaulted loan or NPA out of the asset side and reports the amount as a loss. That is the loss of bank. After the write off, banks are supposed to continue their efforts to recover the loan using various options. Maybe asset reconstruction companies can also be the one option. They have to make provision as well. Provision maybe provisioning from their own profit or maybe their own resources, right? The tax liability will also come down as the return of amount is reduced from the profit. The chances of, because tax is on profit, so when you have shown that particular loan as your loss, so your tax liability also reduces. The chance of recovery from return of loan are very high, as shown by the RTI reply. Now, Multi-State Cooperative Society Amendment Bill, as we have already seen Multi-State Cooperative Society in a while. So, let's continue this. The Multi-State Cooperative Society Amendment Bill was introduced in Lok Sabha on December 7 this year. The bill amends the Multi-State Cooperative Society Act 2002. What are the key provisions that will be that is there in the bill? So, election of board members. Under the Act, the election of the Multi-State Cooperative Society Board are conducted by the existing board. The amendment bill proposes to set up the Cooperative Election Authority. So to set up a cooperative election authority, this is one update that you can remember. Now the function will be conducting the election for the board of Multi-State Cooperative Society, supervise, direct and control the preparation of electoral rolls and perform other prescribed functions, right? The Cooperative Election Authority will have a chairperson, vice chairperson and up to 3 members appointed by the central government based on recommendation of a selection committee. So the role of central government will also increase. To be elected as a board member of or office bearer of the cooperative society, she must be an active member. Active members are those availing minimum level of products or services of the society or attending at least 3 consecutive general meetings. Those are active members. Complaint redressal. Under this bill, the central government can appoint one or more cooperative ombudsmen, right? Ombudsman with territorial jurisdiction. The ombudsman will inquire into the complaints made by the, it is like Lokpal, right? Ombudsman, but it is not at that level, but I hope you can understand that the grievance redressal mechanism is there. Now, cooperative societies regarding their deposits, equitable benefit of the society's functioning, issue affecting the individual rights of the society's member. This is related to this. Now, we'll not go into the much details of this merger of cooperatives. For example, the ombudsman is required to complete the inquiry process and adjudicate within 3 months whatever grievance redressal mechanism is there, and these appeals can be filed against ombudsman direction also within a month to central registrar, who is appointed by the central government. Basically, the higher authority in this multi-state cooperative societies. Merger of cooperatives, if we talk about, the act allows for the integration and merger and division of multi-state cooperative society through a passing of a resolution at a general assembly. The act requires at least 2/3 of members present and voting, right? 67% almost. The bill allows the cooperative societies registered under the state laws to merge into an existing multi-state cooperative society. Such a merger can be achieved if a minimum of 2/3 member of the cooperative society present and voting at the general meeting passed this resolution and allow this. Now, if we talk about revival of sick multi-state, sick means they are not able to perform, they are not able to function. Setting up for the cooperative rehabilitation, reconstruction and development fund to revive the sick multi-state cooperative societies. A sick multi-state cooperative society is the one which has accumulated losses equal to or more than the total of its paid up capital, free reserves and surpluses, has suffered cash losses in the past 2 years, right? The central government is empowered to launch a scheme for the rehabilitation and reconstruction of the sick multi-state cooperative societies. The fund shall be financed by multi-state cooperative societies that are witnessing profit for the previous 3 consecutive financial year. They will deposit either 1 crore or 1% of the net profit into the fund, whichever is less. So the profit making will be creating this particular fund, right? Specified cooperative societies, the act allows central government to direct and supersede boards of specified multi-state cooperative societies. This is all about how the functioning will be done. Composition of the board of directors, as you can see, the board of a multi-state cooperative society will have 21 directors. The board may co-opt for 2 or more directors under the act, and the amendment bill mandates that the board of directors must include 1 SC/ST member also, right? These things you can leave. Increase in penalties, the act recognizes certain offences by multi-state cooperative society or its office or members. These include making false returns, furnishing false information or disobeying any summons, right? So such offence can attract fine from 2,000 rupees to 10,000 rupees. Also, we can talk about the bill include a new offence, the failure of file any return or information. The failure, this fine for all these offences has been increased from 5,000 to 1 lakh rupees, right? This is about. Now, cooperative society, if we talk about in detail, then Union Home and Corporation Minister Shri Amit Shah inaugurated mega dairy at Mandya, that is in Karnataka, place in Karnataka. So how these cooperatives work? Key points highlighted here is the National Dairy Development Board, NDDP. It was much in news before Karnataka election also, and Ministry of Corporation will establish primary dairy in every panchayat of the country in the next 3 years. Amul and Nandini together. Amul from Gujarat, Nandini is from Karnataka. Work together setting up a primary dairy in every village of Karnataka, and in the 3 years there will not be a single village in Karnataka without a primary dairy. To bring transparency in cooperative computerization of 63,000 primary agriculture cooperative societies, that is PACS, being done across the country at a cost of rupees 2,500 crore. Through PACS, that is Primary Agriculture Credit Society, the cooperative covers 70% of the farmers in the country. Now, if we talk about cooperatives in Karnataka, 23 lakh farmers, mostly women, are paid rupees 28 crore per day under the Nandini brand in Karnataka, which is making their life more prosperous. The first cooperative society in the whole country was established in Karnataka in 1905, and the cooperative movement started from there. Cooperative in banking was first established in 1903 in Bengal. Today there are 15 26,000 villages approximately level cooperative dairies in Karnataka, in which 26 lakh farmers deliver their milk daily through 16 district level dairies, and 28 crore rupees goes into account of 26 lakh farmers every day. Cooperatives in India, if we talk about 30 lakh cooperatives in the whole world, 9 lakh cooperatives are there in India. 91% of the villages of the country population are connected to the cooperative. Contribution, if we talk about, 19% of agricultural finances through cooperative societies, 35% through fertilizer distribution, and 30% through fertilizer production, 40% through sugar production, 13% wheat, and 20% paddy procurement is through cooperatives only. Cooperative is production for masses, production by masses, right? Cooperative by masses for masses. Successful model, if we talk about Amul, this Kripko, IFCO, and Lijjat Papad also have set a successful example in front of the world. The white revolution in Gujarat has changed the fortune of farmers, and through Amul, 60,000 crore rupees are deposited into the bank account of about 36 lakh women annually. If we talk about other government scheme related to this Ministry of Cooperation, a separate Ministry of Cooperation which with the vision of Sahkar se Samriddhi, that is prosperity through cooperation. Sahkar se Samriddhi, prosperity through cooperation. Shir Bhagya scheme, Karnataka government is providing free milk to schools and Anganwadi 5 days a week through cooperatives only. Constitutional provision, if we talk about the Constitution 97th Amendment Act 97th Amendment Act 2011 added a new part 9B right after 9A, that is related to municipalities regarding the cooperative working in India. Article 19(1)(c), 19 clause 1 subclause C, the word cooperative was added after union and association in Article 19 clause 1 subclause C. This enables all the citizens to form cooperatives by giving it the status of fundamental rights of citizens. Article 43B was added in directive principle of state policy, part 4 of the Constitution, regarding the promotion of cooperative society, right? So this is where we are finishing this updates related to debt and banking. Now we will proceed ahead with the updates on insurance in the next video. So stay tuned with the on the channel of Victory IAS to receive more information on current affairs, right? See you in the next video. Thank you very much.